Hello, welcome to a demonstration on how you can calculate a yield return from investment. So this is just a quick calculation using a scenario of an individual who invested their money into some common stocks. And in this particular case, they only bought 2 shares of common stock for $400 each. And during the year, they were able to receive $57.50 in dividend. And earlier today, they were actually able to sell the stocks for $530 each. So the quickest way of coming up with this type of calculation is to capture important numbers first. And here we know dollar income is going to be our dividend, which is 57.50. And then the beginning balance. So the beginning balance, how much did they buy those stocks for? So they were actually 2 of them, 480 multiplied by 2, and they were able to sell them for $530 multiplied by 2. Right, so here we have important information that we need: dollar income, beginning value, and the ending value, which is pretty much a nice build up to the formula that we're going to use here, the yield return. As you can observe here, we are not only going to calculate the yield return, the overall, we are also going to break it down into dividend yield and the capital gains yield. It's very important for organizations or individuals to know the differences between the two, because those yields are taxed differently, right? So here we take a quick look now at how we can actually calculate the yield return. So the overall return is actually made up of, so equal sign, open parenthesis, and we know the dollar income is going to be our dollar income plus, open parenthesis, the ending value, which was the 1060, minus the beginning value, which is $960. And then what do we have here? So closing parenthesis, double closing parenthesis, divided by, okay, the reason why I had to do double closing parenthesis, you can see we had the initial open parenthesis and then we did second open parenthesis, right, for the ending value minus the beginning value. So it's important that I close all of them before dividing by the beginning value, which was 960. So press enter. Here we can see that the yield return is actually 16.41%. So now I want to see how much of that is from dividend yield and how much of that is actually from capital gains. So dividend yield, we know that dividends received were $57.50 divided by the beginning value, which is 960. Like that. So the dividend yield alone was 5.99%, which is almost 6% if we round it up. Now finally, the capital gains is actually made up of ending value, which was that 1060, minus beginning value, which is 960, divided by the beginning balance. Right, so basically here we are saying that by how much did the stocks appreciate in value? That is actually what the capital gains yield will be. So it actually appreciated by 10.42%, which is actually from 480 per share to 530 per share. That was quite significant in that particular regard. So now how do we know that the breakdown adds up to the yield return? So if we say 5.99 plus 10.42, we can see that it does check out at the total yield return. Of course, many would ask, why bother? Why do you have to break it down? Because you'll find that dividends are taxed differently, whereas capital gains are also taxed differently. So it's important to know the difference between the two, and then that way you'll be able to make sure that even if you as an organization, you know how to account for that correctly, or even as an individual, you know that what you are going to declare on your tax returns as dividends will be different from what came from capital gains. right, is required by the law. So it's a very, very interesting demonstration here, and I hope you'll be able to find this helpful. And again, we've been able to do this in less than 5 minutes. Thank you so much for watching. And again, like the video, share the video, and be sure to subscribe to the channel. And above all, comment and provide some feedback so that I can learn from your observations. Thank you so much for watching, and bye for now.